this guy. So I barely would have taken trades like that. But it is what it is. We also missed this previous daily cycle, is what just missed. So it's the current situation. Okay. Yes. Also, let's take a look at Australian dollar USD, because actually here, if anybody remembers, yesterday we had the analysis that the market would trade up above into this point of interest area. And you can see what happened here. The market was traded up, completed the free Asian range high of the day, the retail trend line, which I pointed out, and obviously the huge drop. Now it might be heading towards this buy side liquidity. So I would expect a further drop on this. Guys, now that everyone joined, I believe in this lesson. At the moment, I do not want to analyze too many things in the market, because it's still a little bit early for me to analyze. I like to analyze the market more closer to New York Open. So at the moment, I'm not really doing any analysis. Also, with the fundamental news and the news events at the moment, I rather stay away from analyzing anything at the moment. I think we should rather discuss a couple of things about educational materials. I would like to explain the difference between the continuation, and I would also like to explain the difference between the reversal daily cycle. So that's one of the things I have mentioned a few days ago in my Discord community, that actually we got two type of daily cycles. One of them is the continuation, and one of them is the reversal. I will explain both of them in detail. For some of you, I have already explained this one on a one-on-one lesson. Privately, I have explained it. So it might be a little bit boring for some of you, but at least I will share it again and repeat everything, so you guys can memorize everything much better. So let's just move to the side and let's mark up both daily cycles. You can sort of take this as a new topic, because I haven't yet made actually any actual content about this, so you can take this as probably the first actual content about explaining the difference between the continuation and the reversal daily cycle. The reason why I haven't mentioned anything about this too much before, because first I wanted to share the simple daily cycle when we are looking at the continuation in the market. So I believe even if you only know that, you can become consistent, but sometimes obviously what would happen, you would get confused why you would hit the stop loss, or what's actually happening in the market, if you only know one of the cycles. So that's why I believe at this stage, now that we have discussed the continuation version of the daily cycle quite a lot, and we have been working on this topic for the last month, I believe we can move further with the reversal type, so we can advance our knowledge in this way. So let's just look at the first one, which is obviously quite familiar for everybody, would be the continuation daily cycle. So it's quite familiar pattern. You all know about this. We would have obviously Asia range, then we would have also the midnight, right? So the midnight, just let's mark that up. After the midnight, we would just as illustration. So do not care about the times here. I know it's inaccurate, but I'm doing it for illustration at the moment. It will take a while until I mark this up, but I try to be fast. So obviously you guys all know about that one, the continuation, but the reversal would look something like this. So we would have first the Asia, then the market would look something similar to this. First the Asia range, then now here the significant difference what would happen in the market, that the one of the sides of the Asia range liquidity would not be swept. So we do have only one side of the liquidity swept. So what I mean by that, in this case, the continuation, we see the low swept, see, with the low of the day it's swept, and the high of the day obviously sweeps it. So that's one of the ways to confirm if it's continuation. But first we need both sides to be swept of the Asia range. But usually when it's not swept away, let's say the low, and London Open would just rally. Okay, let's adjust this. So it would look something like that. Okay, just want to make it look good. Let's just extend this slightly to make it a little bit bigger. All right, I believe this is a nice illustration of it. So a lot of times when, let's say, the low would not be swept, only the high, it's a very bullish London move, and we do not have the low swept. Many times this would give us a reversal in New York, because one of the things behind the reversal idea is we do not have, excuse me, we rather have the liquidity here below, so we do not have the liquidity sweep. So we would look at these lows as obviously liquidity in the market. And that's one of the main facts you have to recognize. Also, other things you have to recognize aside of just not sweeping one side of the liquidity. Yes, Andre, you're absolutely correct. So this is what actually happened on Euro USD, but it was quite interesting because actually it was quite different because on Euro USD yesterday we did have the low swept, but I will explain why it went in the other direction. Because I actually had an idea that it could go in both directions, but somehow the bullish bias was a little bit stronger in me. So this is one of the main ideas you have to take a look at. So is the low swept away? If it's not, and let's say London is bullish, it's obviously this part is seen as liquidity in the market. So you would look at this as potential liquidity that will be taken out. It's just a matter of time, and it will likely take out the liquidity. That's what we seen exactly in gold also yesterday. What I said, we do not have the high swept, it means not swept, then it's just a matter of time, and we should be able to see we should be able to see the sweep and the directional change. So also another thing, usually we should see the market with this London move take out, let's say, a buy side liquidity in this case, and obviously if it's sweeping some liquidity, then we would be able to expect reversal after liquidity sweep. So many times this London move would only be a stop hunt of, let's say, a past equal lows here, equal highs, or an old high or something like that. Sometimes it's even arriving to, let's say, a POI. Sometimes it can even arrive to a point of interest level where we will see the market rally up. But usually we would like to see actually a bullish move, a strong bullish move, just to clarify better. So we would like to see a strong bullish move and not some choppy move to the upside. The best is if this London move it's a rapid, it's a strong move in the market that's attacking a liquidity pool. It's attacking liquidity pool, or it's attacking a point of interest area to react from. So a lot of times this would happen on the reversal. Also, another thing would be, okay, just before I continue, actually, guys, a couple of, I have actually someone who joined with the name iPhone FFWCR. So I'm not sure if so just make sure to join with your Telegram name. So in case you have a Telegram name, just make sure to exit this Zoom call and rejoin with your actual name so I can know who's who. Yes, 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 that's you. If you write, okay, Mike, okay, thanks, that's fine, that's fine. Sorry about that, but I just want to make sure that everyone is in the mentorship, especially new topics, new content. So all right, so let's continue. So actually, what would also happen as an additional confluence is the angel range standard deviations would be something aligning with, let's say, it would be aligning with this point of interest area, or it would be also aligning with this old high, this buy side liquidity. So that's also something you need to look at. So as we discussed previously, usually the high and low of the day would be 2 standard deviation, right? So you should expect high and low of the day to form as 2 standard deviation. So that's your standard and regular expectation about the market. It's especially 2 standard deviations if, let's say, these 2 standard deviations would be aligning with a point of interest area. So just it's something to look out for. So if it's aligning with a point of interest area, the 2 standard deviation, then it's very high probability that this would become the actual high of the day. And then we would like to see a pullback back into this bullish move. So we would like to see the pullback and the reaction from the 2 standard deviation high of the day. So we would like to see the reaction from here and also obviously from the point of interest area. And the execution, it will usually be a no break of structure execution in the market. So we would just see a pullback and then retracement, and that's when you can apply your FIB tool. And once you apply this, you should be able to execute this trade. Now, like that, you should be able to execute this. So this is the reversal. Same thing, I was expecting the exact same thing on gold, if anybody remembers yesterday, but the only thing that happened there, we did not see the pullback. So the market just did a mini pullback and then exploded. But if that pullback was actually happening, then we could have been taking the trade. Sometimes I believe sometimes if it's confusing, if it will be a reversal or it will be a continuation, sometimes it might be also beneficial to execute both. Let's say the market first would arrive here into the reversal, and then you could maybe just try to take this, in case it would reverse end of the day or something like that. So if you're holding this position, you obviously cover the losses. It's not a big deal, but also something that would confirm that it's actually a reversal, or if it's not a reversal, that many times the actual execution of the daily cycle so what's the key zone, right? So it's 7, 11 New York time, right? So New York. And many times the actual execution of the daily cycle itself, so the actual entry here and the actual entry here would be a half an hour period in the market, and that would be 8 until 8:30. So it's a half an hour period. You have half an hours, and most of the time, if you do your back testing, you will notice yourself, and if you just study this, how the time works in the market, you will notice that it's usually a half an hour time period when the actual entry happens. So let's say you could also use this as additional confirmation for yourself. Let's say the market would arrive here into the kill zone, and the actual entry would happen at 8 o'clock to 8:30, right? Then if you have an entry at 8 o'clock to 8:30, that's giving you a bullish cycle, then it's most likely going to be a bullish cycle. If the actual entry here is a pullback and a reversal, pullback and a retracement at 8 o'clock or 8:30, then it's most likely becoming a reversal, because sometimes this move here on the bottom would arrive like 10 o'clock 50, you know what I mean. So it's almost end of the cycle, end of the kill zone. So even though we are looking at a kill zone, it's usually the actual execution would happen 8 o'clock to 8:30. So also just a very small detail that I would like to point out. So it's also something we might need to look out for. So yesterday on Euro USD, I did have my analysis that, you know, we had a nice looking bullish daily cycle. But if you notice, the actual entry for the daily cycle on the bullish side was like arriving at close to 11 o'clock, right? So it was almost the end of the kill zone. But the reversal was somewhere around 8 o'clock to 8:30, if I'm correct. But in a moment we will look at it. But something I just wanted to point out, so this is also you have to look out for. So this is actually the reversal. I believe I pretty much explained the most details about it. So this is the reversal pattern revealed. If anybody has any questions about it, just please let me know. If I will also take a look at the chat in just a moment. But if anybody has any questions, just please let me know before I would go ahead and read the chat. Okay, so no questions. Let me just read the chat. Yes, definitely. I will just mark it up. So, you know, as visualization, we could definitely mark this up. Right there. So just as visualization of the key zones, right? So if you would like, just make a screenshot of this, or I will also just post a screenshot and take it now. So I will post this screenshot. Sure, we can take a look at Euro USD, yes, from yesterday. Guys, if anybody has any questions, just please let me know. If there are no questions, I will stop this recording. I will end this Zoom, and I will send you a new link because you know, it's like a time limit on Zoom, stuff like that. So you know, I want to have I do not want to get cut in the middle of the sentence while I'm showing you examples. So I will just end this Zoom right now, and I will send a new link. Just a moment, guys.